Am I making myself make some sense, or you need me to show you something? We can schedule something out if that's you're not understanding my question. Hi, coach. I kind of need your advice or at least your guidance on something. In trading, I have noticed that when I have my top six, my high probability trade, so I focus, did the whole watch list and everything, and I'll focus the trade. And let's say that I have executed in the trade, and the market took me out, right? So the market is evolving into something else differently. I would still hold that bias where, let's say, the market has now become invalid. For example, I'm looking for a trade to go short. We have our impulse, or we have our 1, 2, 3 touch, and I'll execute on the trade, right? According to the according to our guidelines and principle, our trading plan. So I execute the trade. It will take me out. So at this point, the wisest way is to wait for the market to form another structure or form another entry and we execute, right? So when the market evolves, let's say it evolved, now it's showing us buys instead that it has come now a valid trade instead of a hyper-rated trade to one side. I will still hold that bias, wanting to go short into the market. So I'll still marry the bias. I'll still marry the trade in the bias or something. How do you how do you go away from it for being able to flow with the market? Let's say it's showing you something different and detach from that first notion of your forecast and be able to, let's say, take this buy trade instead of the short trade because it has given opportunity for that buy trade. I have found myself that when I look into my journals, I'll be binary to that position. Is there any advice that you can give me? And also, am I making myself make some sense, or you need me to show you something? We can schedule something out if that's you're not understanding my question.
Yes, traders, I think we have all heard the question, and technically it's such a brilliant question. So the real question is, how do we mitigate the bias once a trade setup does not move on our favor, but the trade still remains to be valid and we want to still get involved into the position? And before I jump into this particular video, I want you to stick to the end because I'm going to provide so much clarity in such a way that you will know exactly what to do next. For those who don't know me, my name is Oscar Chualala. I'm to a vision and mission of empowering traders through 7 Principles FX, and part of doing that is through the content that I'm consistent sharing on my YouTube channel and Instagram. So follow me along as I walk you through. Now I'll be using USD CAD as my main example, okay, because this is one of the positions that I took from previous weeks, okay, and then I'll be using to demonstrate how to mitigate the bias. So there are some few things that we have to understand as traders. The first number one thing is that we need to get clear on the higher time frame, whether a trade setup is a valid setup or a trade setup is a high quality setup, okay. Now in understanding that, I've already made a video and you know what to concentrate on, okay. So when you understand that a trade setup is valid, it means that you will forecast the scenarios that will make that particular trade setup to be valid, okay. That will invalidate the trade setup within itself, meaning that if you are going long, you need to forecast the scenario that will explain the trade setup to go long, and in going short, you will explain exactly the trade setups that will give you an opportunity to go short. So clarity wins confusion, and once you are clear with that, you go to the next step, which is understanding if the trade setup is high in quality. High in quality, it means that the trade setup has a very higher chance, like 80%, to move in the direction that you are anticipating in the first place. Now let's take an example on USD CAD, okay. This USD CAD position has a very higher chance of moving to the downside, and this is what I was forecasting beforehand, okay. So if I look into the higher time frame, I can see that we have already cleared the previous low, we have already broken this previous low, and there is a clear continuation. So what I'm supposed to do over here, when I jump into my H1 time frame, I need to know exactly where to enter and how to enter exactly, so that anything that happens around, I know that's just a noise in the market and I don't need to listen to that particular voice. Now, if this is our example and we want to get involved into this, the first number one thing is that we have to understand that this particular trade setup formed a clear continuation over here with these V-shaped vibes. And you know, with these two touches flags with a V-shape, more often than not, they don't evolve into more of a 3 touch. So you already know in the first place that when they create an impasse, like what we have seen here, an impasse, and then we see this clear 1, 2, 3 touch with a clear middle section, we know that exactly the price is more likely to still proceed in that particular direction. So my duty as a trader is knowing exactly where do I enter. For instance, over here we can see there was a first entry after we had this clear rejection candle. That was our first entry. Okay, now entering over here and saying that you are protecting yourself over there is not real. Okay, so you'll be just increasing the risk within the position itself. Okay, but a better way over here would be you would have gone to the H4 time frame, and because this H4 time frame has closed now, we have finished with a nice rejection candle, then you would have opted to enter over there and your stop loss just being over there. And then the set scenario would be that if I'm going to go short, then if I miss all of those risk entries, then I need to wait for a push and a flag. What would that be looking like? It's just a clear impasse and then a clear what? Continuation that I'll be looking to take advantage into the next run. Now, this is what happens to traders in terms of the confusion, because I know this particular trade setup is high in quality. Okay, so I do not need to concentrate into the bias of going long, though I know it can still happen. Okay, so what if the market provides you with that particular opportunity? The answer is simple. That's why you need to understand in the higher time frame if that particular trade setup is valid or high probability. Valid means it can play out to the upside or to the downside. Are we clear? Are we together? So if that is the case now, I know this is a very high quality setup. So 2 of the scenario, or 3 if you like, including the insurance entry within that, would have given me an opportunity to enter into the market. And if, for instance, this is now an impasse and then this may be turned to be a correction, and then I see the price just moving over there, I won't be surprised, because I know my mind needs to still see the market in the same exactly way. And what would this look like? This to me would look like something like this. Okay, this would be my first touch, this would be my second touch, and I'll be looking for the risk entry on the third touch. If not, push and a flag. Why? Because the higher time frame has already explained to me this particular trade setup is high in quality. It means that it have a high probability to play to the downside. Okay, if it was a valid setup, then I could realize that where would be the areas that I would look to go long. Maybe if we had cleared these previous highs and then formed a clear continuation to still look for something like that. But anything lower than that, I would not prefer in going long. So let us just forward the price a little bit and see. This is what would have happened. Okay, this would have happened. Okay, and do you see? So there is a flag that just happened over here to the 15-minute. So you would have been involved into this one and take advantage of that particular move. So what are you waiting? And how are you forecasting? So anything that happens between is just a noise. And yeah, that's it. You keep it that simple in understanding the bias of your trade setup. And if the trade setup still remains to be valid, you need to understand Is it still valid to the direction that the higher time frame is telling me? That's the real question. I hope now you have learned something, and please do let me know in the comment section below. Were you also facing the same error of just being confused with the bias? And from this video that you have watched, what have you learned and what are you thinking to apply? Comment below and see you in the next one.